Hello, it is Maryjane Okpala, Senior Growth Lead here at BudPay. And on today's episode of Tax Series with BudPay, I have a very, very special guest. One of my favorite financial experts, an ex-Big Four, none other than Dr.
Collins Igwe.
He doesn't want to, announce his capabilities, but he's by far too humble with that introduction. So, Dr. Collins, we're really glad to have you on this
Thank you so
series.
much.
And
It's good to be here.
today, we really just want to talk about what the tax reforms mean for businesses, for staff, for individuals, for entrepreneurs out there. And we want to simplify it as best as possible so that the layman on the road listening to this understands what it means. So my first question would be, in this new tax reform, as someone who works a 9-to-5 job and is already remitting payee, and that person also has a business, like a separate business outside of the office, what does that mean? And would they be taxed twice?
So it depends on what kind of business the person runs. If the person is running the business as a limited liability company, it's different from if he's running the business in his own personal name or in a business name. Because the body responsible for the taxes are different. The Federal Inland Revenue, which is now the Nigerian Revenue Services, is responsible for the federal taxes, which is for limited liability companies. But if it's an individual, it falls under the state purview, which is the State Inland Revenue Services. So for Lagos State, it will be LIRS. So it depends on a couple of things, where the company is incorporated, where the person is resident, which state the person is resident, and I'm not sure which state he carries out the service matters that much, but which state the person is resident matters the most. For example, when I was in UBA back then, they would say those that live in all those, I think Mowe, all those areas, after Ota, they remit their pay to Ogun State. Not Lagos State, because they are not resident in Lagos State. So those same rules will still apply.
And does the tax percentage vary for each of these states, or
No,
it's a general fee across all states?
Rate across all states, which is being prescribed by the NRS. So if he has a limited liability company, that company is subject to VAT based on their revenue threshold. That company is subject to company income tax, and is also subject to there's another levy that was introduced of 4% of accessible profits if it's a limited liability company.
And by accessible profit, what do you mean?
Accessible profit is when you take out your profit before tax and you make a few adjustments before deducting capital allowance. That's what you have is a tax listing. So you have what you see in your financials is your profits before tax and profit after tax. What the taxman sees is different, because some of the things you deducted as expenses, he doesn't see it as an expense. Some of the things you have not deducted as expenses, he sees them as expenses. And also the timing also matters. A very common example is things like depreciation. In your typical books of a company, when you buy an asset, you depreciate it over 4 years. You have your own company depreciation policy. The taxman has his own separate rule, which is for capital allowance that he would use to apply. So in arriving at your capital allowance, he would back out your depreciation.
Okay.
In arriving at that, so your accessible profit will probably be higher. You can make a loss and have an accessible profit.
Because the depreciation has been backed out.
A couple of other things, yes. A couple of other things, yes, would have been backed out. Yes, so that also varies, but we don't want to go into that technical. Yeah. Now, if he runs the business in his personal name, he's supposed to do what we call a self-assessment at the end of the year and file in addition to the PAYE to the state to say, oh, I work with BudPay, I earn X amount of money. However, I also do other this, and I earn this income. And based on the income I earn, this is what I earn as a net, whatever, and this is what my taxes will be, and remit those taxes to the state's Inland Revenue Services.
Okay, so it's going to be, if I get you correctly, a consolidated tax percentage.
Yes.
So more or less like whatever you've paid on payee, let's assume is 3%. by the time they are calculating, or 20-something percent, by the time you are calculating on your personal business, the difference or the differential is what you would need to pay in addition to
so whatever in quote you earn from the business as like your profit will increase in quote your salary and make you pay higher taxes.
So they total the salary by your profits in addition to what you earn from
something in that
the
line
company.
And revise it so you now pay more taxes to the government based on other income you have earned.
So there you have it. As a business owner, I believe that must have answered the question you have on that. I had a question while you were speaking, Dr. Collins. It sounded more like you were talking for big limited liability companies. Let's bring it home to Instagram vendors. So we see a lot of popular Instagram vendors who are really doing good numbers, who have taken over the streets of Instagram, selling yogurt, selling bed sheets, selling glasses, and other businesses that they are doing. They are also limited liability companies. Some of these businesses are at the end of the month, or they are turning in 100 million, 200 million, 300 million. What and how does this affect their business?
Okay, so the new tax law doesn't have so much of an impact on SMEs.
Okay.
It has more impact on big companies.
Okay.
Right? So, in fact, for small entities with revenue of 100 million and below are now exempted from taxes.
Okay.
So if your turnover for the year, so that means you make an average of 7 million a month, 8 million a month, you don't have to pay taxes.
But if you make above 8 million a month?
8 times 12 is 96, so it's 8 point something.
So let's say you make 12 million a month.
You have to pay tax. You're not subject
and
to taxes.
And that 12 million is revenue, not capital
not
plus revenue.
Revenue, yes. Not once your revenue, your turnover, your sales, people come to buy, let's assume you sell shoes. People come to buy shoes. In a month, you sell shoes more than 12 million naira every month. Then you are now fully in the tax bracket and you should pay taxes based on that, your CIT, your VAT.
So CIT, by CIT, what does
Company
that mean?
income tax,
Company
which
income
is taxed
tax.
at, I think, 30%.
30%.
You pay the accessible profit, which is taxed at 4%.
Okay.
And all your sales, everything you sell is subject to VAT at 7.5%.
Whilst you were speaking, Dr. Collins, you said people with less than 100 or 100 million and below are exempted. So being exempted, does that exclude me from filing?
Absolutely not.
Okay.
No, it doesn't.
So how does that work?
You are still expected to file. Filing means you're telling the government that, hey, I'm here, I'm doing business, but my revenue is not big enough for you to tax me. So you do what we call a nil returns.
A what?
Nil returns.
Okay.
You just file nil every month. You file your financial statement and they see your numbers as less than this, so you're exempted from all the taxes. Now, the essence of filing is tomorrow when your turnover grows to 101, you now move to the taxable brackets of the income. Yeah,
so more for accountability purposes.
More for accountability. It's just, typically you just have to file. Yeah, if you don't file, they can see that you're trying to evade taxes. Maybe they would assume that your business is doing so much, and that's why you don't want to pay tax, or you are trying to avoid paying taxes. But if you file, you are saying, I'm not avoiding paying taxes. I'm not just required to pay taxes. Yes. So nobody's going to come and stress you. But if you don't file, what's going to happen is you keep getting letters from different FIRS, different people writing you that, hey, we noticed that you're doing this, you're not, yeah. So you're not to avoid that. Just get a proper accountant or get an auditor to audit your books and get a tax consultant to help you do your annual filing. And that takes away that burden off you until you cross
the
this
threshold.
thing. Now, the funny thing is, I've often seen people ask is, do you now say you don't want to grow?
Mm-hmm. Because that was going to be my next question. Because,
some people say, oh, I'm doing 80. Yeah, now I'm not paying tax. Do I want to grow? Well, unfortunately, yes. So somebody that is doing 90 million in revenue and maybe 30 million in profits is exempted from tax. However, if you cross to 101, if you grow to 101, you now realize that your tax, government takes 34%.
Oh, wow.
Of that money. So you now be, in quotes, worse off
than when you
were before.
But
so
doesn't that help the economy at the end of the day?
It helps the economy. It doesn't help the person. But that's the price of growth. So the whole idea is to grow and make that taxes you're paying insignificant. But I mean, that challenge exists not just in Nigeria, in most countries, in most developed countries. You see a lot of businesses, they don't want to grow because they believe that once they grow, they enter a tax bracket, and that initial shock of, oh, before I make 30 million, I take home 30 million. Now I make 35 million, government takes 34% and leaves me with 20 million. So have I really grown?
Like a lot of money has been
Yeah,
taken
exactly.
from
Have
you.
I really grown? Would you call that growth? Do you understand? So a lot of people fall into that trap where they don't want to grow. They just want to remain
In brackets.
at that bracket. Yeah, so that would also exist.
Thank you so much, Dr. Collins, for putting
welcome.
that out there. So my next question would be, as an Instagram vendor who's selling clothes, would you advise that they include VAT in the cost of their products?
So if the Instagram vendor's revenue exceeds 100 million in a year, yes. Because if it doesn't include that VAT and take that money from his or her customer, when the government comes, he or she is going to cough out that money.
So they have to include VAT in the cost of their goods.
Correct.
So if before now maybe they're selling something, maybe one piece of clothing for 100,000, they need to factor in the 7.5% of that 100,000
and just give the money to government.
I see.
So the good thing is there's what we call input VAT and output VAT.
Okay.
VAT is always borne by the final consumer.
Okay.
So one of the things that they have said in this new law is people can now claim input VAT. So, I mean, in other countries, input VAT is input VAT. If a business suffers input VAT, is input VAT. So, for example, if I go to a hotel and stay, and the hotel charges me money, there's a VAT on that money. I need to take that invoice back to the company. The company will claim back that VAT, the hotel charged as input VAT. If you go and have coffee, that VAT is input VAT. You claim it. Okay. But in Nigeria, before, it used to be purely for the goods. So if I buy clothes at 50 million and I paid VAT, when I sell those clothes at whatever price and I charge VAT, I can deduct the input VAT from the output VAT.
Okay.
Right? Now, what this new law is saying, they're trying to make it a bit liberal so that you can claim input VAT like the way it happens in other countries. You understand? So I know before, typically, it's purely manufacturing companies that are able to get those benefits.
Okay.
Yeah, but in Nigeria now, most people, they import their goods.
Yes.
You pay VAT at the point of import. Before, you may not be able to have claimed that. It will require a lot of back and forth. But now, I think you should be able to claim all those VAT you suffered as a business.
So at the point where your supplier is giving you an invoice and they've added VAT, you can claim that VAT as input VAT. Yes. So what happens at the point where the goods have been shipped to maybe the shipping company here in Nigeria, and the shipping company has also added VAT?
Any VAT you pay in respect of that goods, you should claim it back.
So how do you claim that? Is it when you file?
When you file. So for example, 7.5% of, let's use 100 naira. I bought it at 100 naira. VAT is 7.5%. That's 107.5 is my cost. And assuming I sold it for 200, right? And I charge 7.5%, that means I charge 15 naira. So I sold it for 215, right? I'm not supposed to give the government the entire 15. Because I have suffered
input VAT
of 7.5. So I'll say, I charge 15, I paid you 7.5. I'm giving you extra 7.5.
That makes a lot of sense. So that way it kind of absorbs the costs.
Yeah, so it's the final consumer
that
bears the cost, not the business. The business bears nothing.
Great. So my next question would be on the investment angle. So take, for example, a stockbroker or someone who is buying stocks in, the stock market, trading through maybe Coronation Bank, an Atlas portfolio, for example. And your entry price into the market with the shares you've bought is like 10 million naira. You then suffer a loss of 8 million in 1 month, maybe the stock tanks. And in the next 3 months, you grow back your portfolio. That same 2 million yields 20 million. What portion of that money will be taxed?
Okay, so the first question is, irrespective of the cost you buy, the gain or loss doesn't materialize until you sell. So as long as you're holding that stock, let's assume you bought it for 100 million. If it drops to 10 million it's called unrealized loss.
Okay.
Why is it unrealized? There's a loss, but you haven't realized it because it can still go up.
Yes.
The same way if you bought it for 100 million, it goes to 500 million, is unrealized gain
Until
you
decide
sell
to
it.
sell.
And now know that you have taken out your money. No, is that the right word? You've actually exited that investment. So you are now at a clear position of a gain or a loss.
Or a loss.
So if it is a loss, too bad. The government doesn't refund you anything. If it is a gain, they take a percentage. I think it is. I know for property now, physical assets is 30%.
Wow, that's quite high.
Yes, it used to be 10%. Capital gains now is it used to be 10%. They've increased it to 30% as normal CIT.
Wow, that's quite a lot.
It's a lot of money.
The difference is
It's
so much.
So if your business has a house and you sell a house, or you buy a car and you sell the car. I mean, I know people that bought cars for 10 million 3 years ago, and 4 years ago, now they're selling those cars for 25 million, even though they've used them. So if it's a business that's making that profit, it's now taxed as a proper income at 30%.
Wow, I see. So regardless of
that. So, but for stocks, I think is that 10 or 30% for all those investments. Yeah,
10 or 30%.
And I know that a lot of investors are unhappy about that.
Yeah, because I mean they're making losses for the duration of time that money stays there.
Yeah, and don't forget that when you invest in those businesses, you pay the broker fee.
Exactly.
And that doesn't form part of your cost.
Yes.
That's not deducted as it. So if you buy shares at 100 naira,
yes,
by buying at 100 naira, you already incur a cost.
of course, from your broker.
But the gain will be determined based, I think, on the 100 naira, not with that cost.
With that cost.
So you already suffer the cost.
Yes, from your broker, and then you're suffering another tax cost.
When you sell, you also suffer another cost on selling.
Wow, that's quite a lot.
It is.
But I mean,
it's going to be a tough.
It's going to be a tough market.
Tough 2026.
I already see the direction in which this tax might steer people towards. I mean, I see this bringing us back to a non-cashless policy or a non-cashless economy.
I don't know about that.
But I mean, we would see how 2027 turns. For remittance businesses, what is the implication of this tax reform on them and on their customers? So people in the US, in Hong Kong, trying to send money home for upkeep, school fees, allowances, or even buying a land, buying a property. What's the impact for them?
Okay, so to be in a layman terms, nothing, because they are not doing business.
Okay.
They're just remitting money home, so they're not doing business. And if you're not doing business, you're not liable to taxes. So if you send your parents $1 million monthly, it's a gift. It's not subject to any tax.
Okay.
Yeah, your parent or whoever you send the money only pays tax when pays VAT when he's spending the money.
Okay, yeah, so if you're sending money for purchase of property, or
you still don't, you only pay the regular like documentation fee to government and all that, but there's no tax at the point of buying. But at the point of selling,
okay,
there are taxes involved. Because if you want to get for example, today, without the tax reform, if you want to get a C of O for your property, right, one of the criteria I know that Lagos State does, if I'm not mistaken, is about you have to pay like capital gain tax.
Okay.
So
on that,
yeah. So if I buy land from you today, and I want to go and perfect the title in Alausa, I know that when I go to Alausa, I'll have to pay CGT. The state will compute the CGT, and because you are not there to pay it, I'll pay it.
Okay.
Yeah, so that's the thing. So that has always been there. You always pay capital gain tax on property.
Okay.
Yeah, that has always been there. So you still have to pay it. But until you sell, like I said, there's no cost to you or there's no tax to you. So if you're just sending money home, business as usual, no difference.
That makes a lot of sense. What industry would you say is hit the most by this new tax reform? Because I know that for different industries, it really varies. There are some industries this would really favor, and there are those whom I think it wouldn't really favor.
I wouldn't want to look at it as industry. I would look at it what class. So small businesses making less than 100 million, yes, it favors them.
Okay.
Right? And businesses above 100 million, not really.
Okay.
Big businesses, no. Because there are a lot of things they've put in place to tax the big businesses. So big businesses, there's really nothing to smile about because your CGT has gone up There's a 4% like development levy now, in addition to 30% profits. What else again? When you have businesses outside the country that is making profits and you have not like send the money as dividend, they can tax that money as long as you control that company. So there are a lot of things that they've done for big businesses that there's really nothing to smile about for them, right? But for small businesses, people that do small business that don't turn over 100 million, of course, they don't have this in. However, they still, like I said, every business still need to register and do the administrative work by doing the proper filing so that someone doesn't assume you're making a lot of money
Whereas
when
you're
you're
not
making
making
a lot of money.
anything.
So that administrative burden has kind of come to stay because one of the things they're trying to do is to capture everybody.
Put
So they're
everyone
really-
under a microscope.
Yes, they're already expanding their tax net. They are writing different people to give them who they are doing business with. They are doing this e-invoicing. When you're invoicing, you're plugged directly to like FIRS so that you cannot adjust your turnover. So they're doing quite a lot of things
I see.
here
I
to
see.
capture all your data. So it's going to be hard for you to evade or reduce your figure and all that. Yeah.
That makes a lot of sense. What implication does this have, or where on the economy, or where do you see this taking the economy? As a finance person, what would be your analysis of this tax reform?
So in everything, in every reform, there are always gainers and losers.
Okay.
Whenever you raise taxes, the government is going to benefit because it's more revenue for them. So clearly, government is going to benefit.
Okay.
However, the consumers or the spenders would not benefit because enforcing the VAT and all those things mean increase in prices, which would mean inflation. Because ordinarily you have bought a shirt from your Instagram vendor for 10K, no VAT. Now your Instagram vendor will charge VAT. Let me also point out there are some industries or categories that are exempted, like healthcare, food. They've tried to exempt those ones from
Because
VAT.
those are what people
Because
need
those are-
every
they
day.
assume those
Yeah.
are basic things.
Basic things
So
people should
healthcare
have.
has never been VATable. It has still exempt from VAT. Food, I think they've expanded what the food would be. So your raw food in the market is also exempted from VAT.
But the restaurants, are they exempt from VAT?
no.
Why? I mean, aren't they under the category of food? People are going to eat and drink
So
there.
the way the law works is it's more like make it easy for the common man.
I see. So the regular roadside food vendor, the mama
Yeah, but you want to
puts
go and eat in I don't want to mention any name now.
well,
But
high-end
restaurants, you're
have to
subject.
pay
You're running a
VAT.
business.
I mean, you have the money to go
I mean, for
there.
Lagos State, they even have consumption tax in addition to VAT.
Yes.
Yeah, so you have to pay those ones.
Because the bills are usually
Yeah, so they give you a bill, they don't add all those ones. Yeah, but the regular stuffs are exempted. Yeah. So, but other things, because I saw one guy that was in Bata. I was like, oh, from buying in Bata this year, from next year, we're going to add 7.5% on the cost. Because what it means is everybody will come for him for VAT.
and he can't cover that money for by himself. Exactly.
So he has to.
So it has to be a transferable cost.
So
One important question that I perhaps may have skipped is for financial services company into FX brokering, bureau de change and those kind of services. As a financial services company doing FX, and you're probably making just 3 naira margin on whatever trade you take, how does that tax affect them? Because then you might see FIRS come and say, oh, you receive this amount of money in your account.
So
you have to pay tax.
Those ones, they're already subject to VAT. The commission they earn or the spread they earn is their revenue and is already subject to VAT. So ideally, nothing should have changed for them. So it's only those that were not paying VAT, that were not reporting those numbers, that would be impacted. But for the registered standard companies, they're already earning that income. They're already paying VAT. They're already paying CIT on the.
And it's on the spread they make, not on the total money
Is on the
that
spread
came
they make.
into
That's
their
the
account.
income. Yes, it's not the money.
So they must declare that this is what
so
they
you
made
need to keep. So one of the ways to save yourself is to keep proper record.
Okay.
So that when they come, you show them.
And by proper record, you mean like invoicing or
Not necessarily invoice, even just detailed. Oh, today I sold $100,000. I made 3 naira,
This
300K. So when you say your revenue, substantiate the revenue, you give them a schedule or a spreadsheet that shows the breakdown. That will go a long way
to save you
than just
from
using word of mouth to say I made it a 50K.
when your account is
Yeah,
purposely
so-
showing
Exactly.
something
So
else.
irrespective, so when she can back it up with things, it makes it a lot easier for you.
Thank you so much, Dr. Collins, for
You're most
coming on this
welcome.
episode. So just one more thing that I think I would like you to do is there any other thing in this tax reform that we haven't really touched on that's also very important for people to take note of?
So, I mean, my advice is always it's cheaper to comply than to face the wrath of the law and all that thing. So, my advice would be for every business to put their house in order, put your books in order. No matter how small you are, put your books in order, have your proper records, hire an accountant, hire an auditor, do a proper books, so that when they come knocking, you present yourself to them. It's
Okay.
easier that way. And again, it's always easier when you go ahead and you file compared to when they come to catch you and say, hey, you're making money, you're not filing.
So I hear this filing, but not everyone knows what it means to file or how they should go about filing. So do they
Get
need to
an
get
accountant.
somebody to do
Exactly.
it? But as a small business owner, do you necessarily need to get an
we can
accountant or you
always
can do it yourself?
recommend, yeah, you just get somebody. It's not, don't do things that you don't know about.
Okay.
So we can always recommend people to help put the books in order for you.
Okay, and they just charge you like a
Very small
fee.
amount of money because your numbers are not big, your records are not much.
So there you have it. We had our honorable guest, Dr. Collins, who I told you is a very seasoned financial expert, as humble as he has made everything sound. That is full-packed knowledge that I'm sure you will be very much grateful to have heard. Thank you for coming with us on this tax series with BudPay, and we'll see you at the very next episode. Bye.
Thank you. Bye.